The following is a presentation of TFNN. Live at TFNN, here's Breakout Investing with your host, Ken Shreve.
Okay, good afternoon, folks. Welcome back to another edition of Breakout Investing with Ken Shreve. Just a reminder, my show airs every Tuesday and Thursday from 3 to 4 p.m. Eastern, and you can listen live on your smartphone at tfnn.com/Moby. Exciting week for me. My new newsletter at tfnn.com launched earlier this week. It's called Ken Shreve's Ultimate Growth Stocks. You can get a 2-week trial right on the home page. I have a model portfolio with a weekly update. Comes out every Tuesday with email buy and sell alerts in between. So I sent out a couple of alerts yesterday with some earnings updates. I also rate stocks in the portfolio on a very simple 1 or 2 scale. A 1 is a buy and a 2 is a hold. So I moved a rating from a 2 to a 1 yesterday. And I did have that handheld address wrong. If you want to listen to the show on your smartphone or handheld device, it is tfnn.mobi, just tfnn.mobi. So I'm excited about the launch of the newsletter. I'm going to be sending out alerts in coming days and weeks and getting the model portfolio back up and running. I currently hold about 15 or 16 stocks, and it's a busy week of earnings over the next couple of weeks for several model portfolio holdings. So I look forward to keeping subscribers up to date with what's going on there. Let's take a look at what the markets are doing. A little less than 1 hour to go in the session. Another constructive day for the market. The Dow is up 43 points. That's 0.3% to 12,734. The NASDAQ underperforming a little bit, but not by much, down 0.1%. 2.5 points thereabouts to 2867, and the S&P 500 up about 0.2%. That's 2 points to 1357. So the story remains the same. There really aren't any sellers around in this market yet, and frankly, there may not be for a while. So it's going to be interesting to see how things play out over the next few weeks. We certainly have run a long way since March 24th. That was when we saw a good sign of strength in the NASDAQ 100 in particular. It was up about 1.8% that day. Some good follow-through for the market, and we've gone up ever since. So at this point, I wouldn't be surprised to see, a little pullback in the market, some normal profit-taking. I don't expect it to be severe. I'm really not expecting the market-leading stocks to get damaged significantly. I think that's one big feather in the market's cap right now, is that there still are a lot of stocks out there behaving quite well, not only in the small cap universe, but also in the mid cap and large cap space as well. Taking a look at oil today, crude oil didn't really do much, added 10 cents to 112.86 a barrel. Boy, I hear from the bears a lot, and they're saying that higher oil prices are going to be a problem for this market, and it's only a matter of time before oil gets to $120, $125, $130 a barrel. Of course, anything's possible, but I just don't see it happening. I think oil is going to trade in a range here, probably between maybe $100, $105 a barrel up to about $115 thereabouts. But I don't agree with Fed Chairman Ben Bernanke when he said yesterday that prices at the pump probably are not going to go materially higher from here. So that was good news to hear from the Fed Chairman yesterday. So we have oil trading around $112.86 a barrel. It traded as high as $113.97 today, but settled well off its highs. Well, gold, another record close at $1531.20 an ounce. Silver up 3.5% to $47.52 an ounce. A lot of people asking me about gold and silver. Certainly silver is more parabolic than gold at this point. These trades are going to continue to work so long as the downtrend in the dollar continues. And again, judging by what Ben Bernanke said yesterday, it appears that monetary policy is going to stay loose for the time being. I said on Tuesday's show that I would not be surprised to see the dollar put in a bottom here soon, and we could see strength in the second half of this year. But the trend is down for now in the dollar, and that should continue to help the metals like gold and silver. I don't have a problem admitting that I don't have any exposure now to gold and silver. There's a lot of stuff working in this market, and you can't be in everything. I just view both trades right now as very crowded. And I typically don't like to be involved in crowded trades. When euphoria seems to be building and everybody's asking you about silver at cocktail parties and you're reading about it in the newspaper and magazines and these kind of things. So it's a crowded trade right now. I'm going to pass for now. Maybe if we get a pullback in silver down to around $45, $42 an ounce, maybe a name like SLW or the SLV will look interesting. But until then, I just don't want to chase it. Economic data earlier today, we got a first estimate to first quarter gross domestic product, 1.8%, pretty much in line with expectations. Not a real surprise there. That's slower growth than what we saw in the fourth quarter. Fourth quarter growth was 3.1%. Many are expecting growth in the second quarter to be closer to that fourth quarter level in that 3 to 3.5% area. So not a big surprise in GDP. Inside the GDP number in the first quarter, we saw that consumers boosted spending at a 2.7% pace, which actually isn't too bad. It's kind of a middling number, but that could have been much worse. We also had weekly jobless claims earlier today. Kind of a disappointing number there. Jobless claims came in at 429,000. Economists were expecting a small drop to 390,000. So claims came in a little bit higher than expected. Of course, next week, a week from tomorrow, we're going to get the jobs report, and that will be closely watched as usual. But in terms of the jobless claims data, this is the third week in a row that jobless claims came in above the 400,000 level, which is regarded by many as a key level. There are a lot that want to see weekly jobless claims stay consistently below 400,000. It looked like we were headed that direction, but in the past 3 weeks, we're back above the 400,000 level. Not the end of the world. I still think we're going to see slow but steady improvement in the employment picture from here. Take a look at a mover in the Dow today, ExxonMobil. Pretty good earnings from ExxonMobil, $430 billion market cap company here. Earnings up 61% to $2.14 a share. Sales up 26% year over year to $114 billion. Good numbers from ExxonMobil. Their oil and gas production continues to be solid. They're really focusing on natural gas right now, but they also had pretty strong results in their chemicals unit as well as their refining business as well. Interesting that about 75% of ExxonMobil's revenue come from outside of the U.S. at this point. Some real big earnings stories today among high-growth names. Citrix Systems, a longtime favorite of mine. This is a company that makes virtualization, networking, performance management software. Earnings up 25% year over year. Sales up 18% to $491 million. Stock is up about 10% today to $85.45. So very strong performance from Citrix Systems. That's ticker CTXS. Carbo Ceramics, another big move for this stock, ticker CRR. This is a very interesting company with a very interesting product. Has a lot of qualities I like to see. Earnings were up 59% year over year. Sales up 22% to just under $151 million. Stock is up about 16% today to $163.53 a share. They make a high-strength ceramic material that's used in the hydraulic fracturing of oil and natural gas wells. So when a company is going in and drilling and they want to get more production out of this well, they use a product from Carbo Ceramics to fracture the well to increase output and stimulate production. So demand is very strong for Carbo Ceramics products, and it should remain strong in coming quarters. So very interesting company here. Another favorite of mine, a new issue, just recently came public. Within the past couple of years, a company called Shutterfly. So when you're taking digital pictures and you want kind of prints of these digital pictures, you can go to Shutterfly and have the prints mailed to you. This company is just doing a major amount of business. They lost money in the quarter, but the real story with Shutterfly is revenue growth. And revenues were up nicely in the quarter, 25% year over year to $57.2 million. This stock is up 12% today to $63.36. So three good growth names there: Citrix Systems, Carbo Ceramics, and Shutterfly. Really, the issue with all three, if you look at a chart for Shutterfly, for example, it's a very difficult stock to buy where it is right now, because it had a good solid breakout earlier this year in February. Then it came down to its 50-day moving average and broke out again in March, and it's been running higher ever since. So I would have put the buy point or the buying area around this stock right around $47 a share. Now it's up around $63. I mean, it could still keep running, and there may be a trade here, but this is also a stock that I think is starting to get extended in price. Same with Carbo Ceramics, a big gap up today. This one's a little bit different. I mean, I could put a buy point here right around $144 a share. At 163, it's made such a big move today, it feels counterintuitive buying all the way up here, but I typically don't like to chase a stock when it moves more than 4 to 5% past a buy point. So we have to do the quick math. See, 163, buy point of 144. That's probably a little bit more than 5% past the buy point. So three good movers here. There was some not so good news on the earnings front. Baidu. Baidu is one of my favorite names in China. Internet search engine, provides targeted online advertising. Basically does what Google does in China. I wrote about Baidu recently as an example of a stock that was potentially forming a late-stage base. And we talked about late-stage bases last week during the show. And a late-stage base basically occurs when a stock stages a series of breakouts over generally a 1 or 2 year period, and that's what you had with Baidu. It recently broke out, staged a nice technical breakout over $130, $131 a share. Now it's up around $148, $149 a share. It's extended. Stock is under a little bit of pressure today, despite good bottom line and top line growth, and actually a pretty good revenue outlook for the second quarter. But Baidu is a name that I'm not interested in owning right now. I think it's made a big price move already, and I really like to catch stocks in the earlier stage of a move. Another disappointment today on the earnings front was, let's see here, OpenText, ticker OTEX. This is another high-quality company. Stock's down 4% today to $61.59, a maker of content management software. Good bottom line and top line growth, but investors are a little bit disappointed with the news today. Stock is still holding above its 50-day moving average, just under around $100 a share. So actually, OpenText is holding just above its 50-day moving average at $60 a share. So when we come back, folks, I'm going to talk a little bit about a little bit more about the Fed. We'll be right back.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make. Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of tfnn.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of tfnn.com or check them out on the American Stock Exchange, symbol GBG.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Welcome back, folks. I just realized I haven't even given out the phone number yet. Still finding my rhythm here with the new show, but the phone number to use to call me is 877-927-6648. 877-927-6648. If you want to call, ask about a particular stock or have a question on your mind, feel free to give me a call. Before we went to break, I was talking about OpenText, a content management software company. It's been a strong price performer. I went to get a quote for OpenText, and I pulled up a chart for OpenTable. So OpenText down around 4%, right around 61.59 thereabouts. But this is a stock that has found support at its 50-day moving average several times during its uptrend. So 50-day line right now is right around 60. So this will be interesting to watch if buyers do come in and support it at the 50-day moving average. Sellers are in the stock today. Again, earnings were good, but obviously not good enough for the market. All right, let's talk about the Fed. I thought the Fed was I was actually excited about this, the news conference yesterday. I like the fact that the Fed wants transparency. They want to communicate with the financial markets perhaps better than they've done in the past. I think Ben Bernanke is doing an exceptional job as Fed chairman. So I thought the news conference yesterday was very good. Judging by the market's reaction, we saw more gains for stocks. And we've talked about the fact that volume in the market has been light for several weeks now, and that's always a problem because I think weak volume makes for a kind of a shaky foundation. But with all the stocks out there that are working now, I think it's just important to swim with the tide and continue to look for profit opportunities. But even behind yesterday's gains, when the Fed chairman gave market-friendly speak, volume really came in about average on the NASDAQ at 2 billion shares, and volume on the NYSE these days, average volume that is about 1 billion shares. So average volume on the NYSE 1 billion, average on the NASDAQ these days is about 2 billion. So it would be nice to start to see some up days in the NASDAQ where volume comes in above 2 billion shares. It really has not happened a lot, and really I'm not sure why the institutional investors out there still seem to be a little bit hesitant to put money to work. It's almost like they're waiting for the next shoe to drop in the market. But some of the highlights from what Bernanke said yesterday, I think the market liked. First of all, I think he made it clear that the Fed is not contemplating any quick policy action to combat higher inflation that is seemingly getting a little stronger. The Fed looks at the core rate, which is still reasonable according to the Fed. Obviously, food prices, gasoline prices are through the roof. But I think Bernanke assured the market that they're not going to do anything quick and raise interest rates quickly to combat higher inflation. In fact, a lot of analysts I follow now, they're thinking that the Fed won't raise the Fed funds rate until the middle part of next year, or maybe even the latter part of 2012. So I think it could happen before then. But that does seem to be a common belief out there, that the hike in the Fed funds rate won't happen until the closer to the end of 2012. Bernanke talked about a strong and stable dollar being in the best interest of America and the best interest of the global economy. Of course, the loose monetary policy in recent months has fueled weakness in the dollar. We saw a good pop in the dollar. Remember last year, the first half of January 2010, up until the summertime, dollar was in rally mode, and then the selling really started to hit in the summer of last year, as investors really started to question the strength of the economic recovery. So I think that if economic data continue to improve, and we see good, robust job growth next week in the employment report, I don't think a strengthening dollar is out of the question. In fact, I think it's still possible. Yesterday, the Fed hiked its inflation view to a level between 2.1 and 2.8%. That's a little bit above its preferred range of maybe 1.5 to 2%. Bernanke still does not seem to be concerned about inflation. That was, well, the expectations are elevated, but still not something that he thinks is really going to derail an economic recovery. The Fed also cut its estimate for growth in 2011 down to 3.1 to 3.3%. Not a big downgrade there. Its January projection was 3.4% to 3.9%. So all in all, I thought it was a great Fed meeting. The market liked it, and we'll continue to ride the uptrend for now. All right, folks, when we come back, I'm going to talk about why I don't like to fish in the large cap pond generally, why I tend to focus my attention on small and mid cap stocks. So we'll be right back.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is now on sale at Amazon.com for only $27.88. If you have an interest in mastering any market with superior confidence, this book is for you. I will walk you through the subjective theory behind quality, volume, and cause and effect, coupled with the objective aspects of the Tiger-Gottlieb, all the while utilizing risk management and Tiger scaling techniques. This will give you the elements of a successful system that can be profitably applied to any stock, commodity, or future market, any place, anytime. I'm offering a complete educational program, including the book, for only $88. You'll receive a live 2-hour workshop in your city or online, where we get into quality volume, the ABC structure, as well as the never-seen-before Tiger-Gottlieb. These techniques will make you money on a consistent basis. You can go to TFNN.com to see when I will be in your city. Don't let Wall Street eat you alive. It's time for you to rule the markets. Go to TFNN.com and sign up for the workshop coming to your city.
Timing the Trade Charts is a complete charting software package that brings together all the tools that you need to analyze stocks using Tom O'Brien's Timing the Trade methodology in one easy-to-use application. For the low yearly rate of $449, Timing the Trade Charts automatically computes swing points, ABCs, Fibonacci retracement levels, confluence, gaps, and much more. Timing the Trade Charts is now available at tfnn.com, and you can download it and try it risk-free for 7 days. We're so confident that you'll love this new charting software package that we're offering a 30-day, no questions asked money-back guarantee. If you're not completely satisfied with this software, just let us know within 30 days and you'll get a complete refund. In order to take advantage of this great offer, log on to tfnn.com and click on the Timing the Trade Charts banner or call our office at 877-518-9190. That's 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of tfnn.com or check them out on the American Stock Exchange, symbol GBG.
Welcome back, folks, to Breakout Investing with Ken Shreve on the TFNN Radio Network. We have a call on the line. I want to go to Rocky in St. John's, Newfoundland. How are you, Rocky?
Hello.
Hey, Rocky. Hey, Rocky, can you hear me?
Hello.
Hey, Rocky, can you hear me?
No, just in the den.
Hey, Rocky, are you there?
Yes, I hear you now.
Okay, sorry about that, Rocky.
Okay, we're through, are we?
Yes, what can I do for you?
Hi, Ken. I wanted to look at IMAX, I-M-A-X.
You know, this is a very interesting company. Have you been to one of their theaters?
Yes, I have been to one of the big screen theaters, but not recently.
Yeah, well, it's it's a very interesting company, Rocky. It's actually breaking out today in heavy volume. The issue I have with it, I mean, is they reported earnings earlier today,
right.
And you had a big drop in revenue growth, down 38% from a year ago to 45.2 million. Earnings were down sharply, down about 92% from a year ago. This may have been a one-time, kind of a one-off event. I mean, the company does have a lot of positive qualities. These IMAX theaters are gaining a lot of traction, and I think the fact that the stock is breaking out today in heavy volume is compelling. But all that said, when I look at a stock, I really like to see the fundamentals align with the technicals. And while growth growth prospects are definitely there for IMAX. The quarterly results released earlier today certainly, raise an eyebrow.
Okay.
So technically very strong. You've got a heavy volume breakout from a decent looking chart, so that's bullish.
Right.
You have a relative strength line in new high ground. That's a technical sign of strength. The stock has been showing signs of accumulation. So technically I can't find anything wrong with it. It's bullish. Fundamentally, there still seem to be some question marks. I like to have fundamentals align as good as possible with technicals, so you don't have that with IMAX. Okay?
Okay, thanks a million.
Okay, Rocky, thanks.
I know.
Okay, yeah, that's a good example. I mean, sometimes you get these heavy volume breakouts, and then investors kind of get lulled in. Well, I'm going to buy the breakout because the chart looks good, but I'm not going to pay attention to all the questions about the fundamentals. And again, there is a growth story going on with IMAX, but these quarterly results earlier today, I mean, it was really didn't look that good. But again, that said, you do have some good institutional ownership. Okay, before we went into break, I wanted to talk about why I don't fish in the large cap pond generally. And I say generally because I do like some large cap stocks out there. Not many, but there are some, and I own a few of them in my model portfolio. But by and large, large cap stocks, when they're in business 75 or 100 years, they reach a period where they just can't grow anymore. And I'm really looking at a stock like a Cisco Systems. Cisco still has a very loyal following, but they're just not a stock that I'm interested in at all because the company is just getting eaten up by the competition. So it's a large cap name. It's a well-known brand. It still has a lot of good analyst support out there. But when you look at the chart, this is a stock that's just in a world of trouble. It's about 35–40% off a recent high. Even a name like Google, another mega cap with a market cap approaching 175 billion, technically just in trouble. There's just a lot of sellers in these stocks because of questions about growth prospects. So typically when I'm looking at a stock, I want to find a newer company that's maybe 10, 15, 20 years old that's still in the early stages of growth, because there I can when I'm buying the stock, I have a reasonable feeling that I'm still in the early stages of a price move. So that's why I typically don't look at large cap stocks. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading in the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, as well as more than 35 different mining equities. For the low price of $150, you will receive 13 weeks of the Gold Report, or you can order up to a full year for under $500. If you'd like to find out more about the Gold Report, log on to tfnn.com, or for more information, call our office at 877-518-9190. That's 877-518-9190.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is now on sale on Amazon.com for only $27.88.
Welcome back to Breakout Investing with Ken Shreve on the TFNN Radio Network. Again, the number to use to get through, 877-927-6648. Just a final thought on large cap stocks, folks. Again, I own one or two large cap names in my current model portfolio, Ken Shreve's Ultimate Growth Stocks over at TFNN.com. But by and large, I do tend to target smaller companies, not micro caps, not companies with $100 million, $200 million market caps. I generally like to put a threshold of $1 billion or higher on market cap. But I generally don't fish in the large cap pond just because I don't really feel like there's generally speaking enough growth that is going to fuel additional price performance. There are people out there. Certainly, Cisco has its fans. Cisco Systems has its fans. The company's going to return to growth mode. John Chambers is going to do what he has to do. Same with Larry Page over at Google. He recently replaced Eric Schmidt. But judging by the price performance of stocks like Cisco, Google, even a Hewlett-Packard, who has a new CEO in place, Leo Apotheker, who took over for Mark Hurd, one of the savviest CEOs out there. But these three companies are just struggling right now. They're technically very damaged. Institutions have been selling the stocks because of concern about growth. So I much prefer targeting newer companies in the early stages of growth that are showing price strength in the market as opposed to these large cap names that are really struggling. Now, I talked about strength in the large cap space on last Tuesday's show, the fact that there are scads of charts in the Dow right now that look pretty good, and these stocks have pretty good balance sheets. I mean, they're not growing at 30, 40, 50% annually, but I'm talking a name like Boeing or even a Caterpillar that's expected to report earnings on Friday, a very strong price performer with nice growth prospects. So Boeing, Caterpillar, 3M, a company that had good earnings earlier this week, even a name like United Technologies, UTX. So a lot of technically healthy blue chips out there, but I would not include Hewlett-Packard, Cisco Systems, and Google in that bunch. I mentioned last Tuesday also this rejuvenated, recovering IPO market. Again, just a heads up, next week we're expecting two highly anticipated IPOs. The first is Boingo Wireless, which is going to trade under the ticker WIFI. This is a company that offers high-speed, high-bandwidth Wi-Fi network access, basically partners with network operators. It's expected to price between $12 and $14 a share. We could see a higher price than that, though. And perhaps the most interesting IPO is China's a major social networking site in China called RenRen, which is going to trade under the ticker symbol RENN. It's also expected to price next week. at a range of $9 to $11 a share. Again, social networking, China. I mean, this just makes sense. A lot of the China internet stocks have been doing very, very well. Other names in the space like a Sohu has been a very, very strong performer. Goldman Sachs has actually been out downgrading a couple of them. They recently downgraded Sina, ticker SINA, and I also believe it was Youku.com, YOKU, that got a Goldman downgrade as well. So a lot of these stocks, you got to be careful. Again, Baidu reported earnings late Wednesday, and that stock is under some pressure today. So you always want to make sure you can find a strong balance sheet and find stocks that are growing earnings and sales quite rapidly, but you also want to pay attention to their chart. Make sure it's not in a late stage base. Make sure it's in the early stages of a price run, not the latter stage, not in the latter stage of a price run. So, all right, let's just talk about this broad market for a moment. Just checking in on the market here. Let's see where we're at. The Dow, it was a mixed performance the last time I checked. The Dow currently is up 40. Getting a little stronger, actually, up about 80 points, 0.6% to 12,770. NASDAQ still lagging, up 0.1% to 2873. S&P 500 gaining strength as we head into the close, up 0.4% to 1361. At some point the market is gonna pull back. We're gonna see some profit taking, and that's fine. Because we've made a big run. A lot of money has been made between, March 24th and now. So the market's been running higher, really no selling at all over the past 4 to 5 weeks. At some point, we're going to see a pullback. When I see a pullback, here's what I'm going to look for. I want to watch volume on the NASDAQ and the New York Stock Exchange. I want to make sure that, you're not seeing volume expansion on the downside. It's not too bad if you get a day here and a day there of it, kind of spread out. But if you start to see heavier volume declines cluster in the major stock indices, that could be problematic. And that would be a time where I may start raising some cash in my model portfolio. I might start taking profits in stocks that have been running higher in recent months. So if we do see a pullback in coming days and coming weeks, I expect it's going to be orderly. If you do see volume expand on the downside, in other words, if the NASDAQ trades 1.5 billion shares one day and then the next day it falls 1% and volume comes in at 1.8, 1.92 billion, comes in higher than the prior session, that's something to pay attention to. These are called distribution days. That's a term used by Investors Business Daily, and they're worth paying attention to. We've seen 0 of them really over the past month or so. That's why the trend remains decidedly up. But if we do start to see them, 1 or 2 is not going to cause a problem for the rally. But if we start to see 2, 3, or 4, and we start to see them build up over a period of a few weeks, that would be a sign that the market may be ready to come in here. So we will see how that shapes out. You're also going to want to watch the charts of leading stocks as well. All the big market leaders, the stocks that technically broke out a month ago, your real strong performing growth stocks, if they start to break through key support levels like the 50-day moving average, that's going to be a sign to maybe take some profits. We'll be right back, folks.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is now on sale at Amazon.com for only $27.88. If you have an interest in mastering any market with superior confidence, this book is for you. I will walk you through the subjective theory behind quality, volume, and cause and effect, coupled with the objective aspects of the Tiger-Gartley, all the while utilizing risk management and Tiger scaling techniques. This will give you the elements of a successful system that can be profitably applied to any stock, commodity, or future market, any place, anytime. I'm offering a complete educational program, including the book, for only $88. You will receive a live 2-hour workshop in your city or online, where we get into quality volume, the ABC structure, as well as the never-seen-before Tiger-Gartley. These techniques will make you money on a consistent basis. You can go to TFNN.com to see when I will be in your city. Don't let Wall Street eat you alive. It's time for you to rule the markets. Go to TFNN.com and sign up for the workshop coming to your city.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing with Ken Shreve. Final segment. All right, coming up Friday, tomorrow, not much in the way of economic data, but we do have personal income and spending due. Personal income is expected to be up 0.4%. Spending up 0.5%. Probably not going to be a big market mover either way, but it is a piece of economic data that is closely watched. I'm going to be very interested to see what Caterpillar has to say. They report earnings tomorrow. Caterpillar's, an example of a large cap stock. It's a $72 billion market cap firm, but full year profit in 2011 is expected to grow 46% from 2010. And, this is a company that got hit pretty hard during the recession, but it's in a nice turnaround here. If you go out to 2012, the Thomson Reuters estimate is for earnings to rise 33% from 2011. Okay, so I mean, this is a company where you do have a real growth story going on here. You look at a weekly chart, however, and you see it's a stock that has been running higher for a long time. So I don't know. I think an argument could be made that it's possibly a late stage base, but technically there's nothing wrong with it. It still looks good. It's only about 1 or 2% from a 52-week high. It recently came down, firmed up at a key support level. So the market seems to be pretty optimistic about a good earnings report from Caterpillar. The estimate for the first quarter, earnings are expected to be up 264% from a year ago to $1.36 a share. It earned 50 cents in the year-ago quarter. Revenues expected to be up 40% year over year. So this is a very real growth story. I mean, we're not talking small numbers here, but revenues expected to be up 40% year over year to $11.5 billion. Now, again, a market cap of $72 billion. It's rare to see growth like this, but this company is in the middle of a turnaround. It came out of the recession. It's firing on all cylinders. It's really a very strong company fundamentally and technically, which I like. Return on equity is very high at 29%. Return on equity is a metric that really helps you kind of separate companies with good management teams as opposed to not so good management teams. So companies with low return on equity, I generally avoid. The higher the return on equity, the better. I generally like to see 20% or more. So in Caterpillar's case, I think the positives certainly outweigh the negatives. But you can say that about other stocks in recent days where the investors have sold the news. So I think it's going to take a pretty strong number from Caterpillar. I think we'll see a pretty good beat on the bottom line and top line. Whether or not it's enough to help the share price, that remains to be seen. Another interesting stock that continues to show price strength in the market, continues to look pretty good technically, very close to a 52-week high. Could be poised to break out is FLIR Systems. That's ticker FLIR. Earnings there expected to be up. Expected to come in at 36 cents. Revenues up 32% year over year to 378.8 million. So watching FLIR earnings on Friday as well. So that's going to do it for the show today. My good friend Tom O'Brien is coming up next on the TFNN radio network, his great 2-hour show. So I will check back with you Tuesday, 3 to 4 p.m. Eastern. Don't forget